Boom, we are alive, ladies and gentlemen. This is Tio in the Arcane Bear. Rock on, ladies and gentlemen. As we mentioned yesterday, when there are fear in the streets, generally almost anytime people are being irrational, especially when you have so many positive indicators, that is the time to be excited. And as soon as you learn how to do that, you will become a significantly better investor. This is one of the easiest ways to recognize market capitulation is by looking at the irrational market's fear. Okay, so what we're going to do today is start off by looking at Bitcoin. Now I'm on a too small of a time frame, so let's roll out here a little bit and then bam. So the bull market is not over. Now, a lot of people are like, oh no, we've had a big drop. It's the worst drop in history. We've never seen anything like it. This is actually true. It's one of the biggest drops in Bitcoin's history that we've ever seen, but there's a reason for that. And the reason for that is because for the first time in Bitcoin's history, we've had an extraordinarily easy access to leverage. I don't know how many bigger YouTube channels recommend using leverage, but they are giving you poor man advice. Don't use leverage, ladies and gentlemen. You are already functioning in an asymmetric area. Don't go and make it hard on yourself by losing the access to the assets where on the long term, especially with Bitcoin, we have always gone up higher. Finding a good investment strategy is going to yield huge results for you if you know how that works. So please just ignore anyone who tells you to lose leverage, and you should probably unsubscribe from them as well because they don't have your best interest in mind. And if you lose your assets in the middle of a bull market, it only hurts. There's no recovering from that easily. So this nice 50% drop likely came from the fact that we have so much leverage in the ecosystem, or had. Most of it's been wiped out now. And for good riddance. It's an expensive lesson for some of you, but keep your mind open. If you're new to investing, it is all about the long-term macro perspectives. As soon as you get that feeling, you start to play here for the longer term, you're going to do much better. Now, one of the fun things here is we're actually starting to see serious volume closes within side of our Bollinger Bands here on the 6 hour. This is actually generally quite a bullish signal. And as you can see, the wicks that we had previously into the Bollinger Bands pushed us down very, very quickly. Now, a big part of the question is the capitulation over? You know, in yesterday's video, I kept saying, yes, we could go to 28,000, but I do not believe that that is going to happen. Now, if it does happen, great. I'm going to buy more Bitcoin at that price. As a matter of fact, I scooped up a nice chunk of Avalanche yesterday as well. Seeing it only at $12 is absolutely mind-boggling to me. I really don't think people understand the access to value and what an opportunity was yesterday. Most of the other assets yesterday have jumped up 40% again already. So the bull market is not over. And this isn't a bear market. Effectively, one of the downsides is you have so many people that are new to this crypto sector who have somehow become extraordinarily popular, probably because they prey on the over emotionality of new investors and hype, when that's not really what you want. So I don't think that one of the things you should do is take stock from people who have been here for a very short period of time. Now, I myself is let's say a weekend hobby scientist. I like to integrate as much data into my thesis as possible, but only from credible scientists. Let's be very clear about that. And that's a difficult one to do because you need to be able to discern the difference between quality information and bullshit. And it takes a lot of practice. So if you're new to this investment space, one of the best things you can do is come up with a long-term prospectus, which goes, look, I don't plan on getting rich over the next 3 weeks because of crypto. What I'm going to do is I'm going to build a strategy that invests consistently every month for the next 10 years, because just like going to the gym, I do not expect to get gains overnight unless I'm cheating by using something like steroids. So don't do that, right? Because it's not fun. You're going to fuck yourself up. So plan for the long term and build wealth the same way all the greats have. Whether you want to read books from Warren Buffett, Monish Prabhai, Christopher Mayer, people that have made billions of dollars, their story and their thesis is always the same, and I myself like to repeat that thesis. Look for high value, low risk investments, and to simplify this, we can say heads I win, tails I only lose a little. And if you prefer to go this way, which I do suggest, tails I only lose a little, heads I win. So you should never be investing I don't think you should be investing investing your entire life savings in something all at once. Now, if you're young and you're feeling ballsy, go right ahead. You got nothing to lose. You're like 22 years old. And as a matter of fact, yesterday in one of our private group chats, we have an 18-year-old who had joined our group, and he has now made hundreds of thousands of dollars in his investment strategy by following some of these simple rules. The bull market is not over. And even if it was, which it's not, you should consistently execute an investment strategy, which means every month I'm going to spend this amount of money on increasing my asset acquisition in my portfolio. Not to wait for the dips, just it's this time of the month. There are countless studies we have gone over within the bear den here that prove that as well. So more importantly, we're going to see probably a little bit more volatility, but let's take a look at one of the charts that I believe to be extremely effective. We're going to have to pause this, otherwise it's going to slow things down. And let's take a look at Glassnode. So I like using Glassnode data here because it brings some of the on-chain metrics, again, specifically for Bitcoin, because it is the leader of our ecosystem. This is where you want to make investments if you're new. Do not try to chase and find the next best thing, because if you're new to this sector, you don't have a clue what is going on. So instead of trying to be smarter than the market, why not just join the market that is already smart? It's much better idea, and it's going to give you, again, that longevity that you really want in the market. You might buy something dumb like BitConnect, thinking that's the greatest thing ever because look, everybody's making gains, but it's a scam. Right? So be wary that in your early days, you're going to try to think that you're smarter than the market, that you for somehow are going to be able to come in and outpace something that has lived and will outlive you. Markets and market sentiment, speculation has been around for almost time immemorial. And if you think you can outsmart something that's been living longer than you have, that just sounds dumb. So this uses a nice way to measure some of the risk ratios based off Bitcoin's on-chain metrics. There are a few different ways to use Glassnode here, but we're going to start with the reserve risk today. So here we can see that at least on the shorter time, here we go. We're in the wrong year here. We are about halfway through this bull market, and we've actually almost dropped all the way back down to like a no or low risk zone, right? So everywhere you can see in the bottom of the screen here, which is green, is basically a low to no risk zone. So anytime you're buying Bitcoin under $20,000 between 2019 and 2020, that was a great investment, right? That effectively represented the best time to buy. And we can also see this on the charts by looking at our long-term accumulation data. And we will do that right now. Let's clean up this chart so you can see it. So Wyckoff has become extremely popular, yet we've been using it for the entire time, and most people get a lot of it wrong because they don't understand the macro perspective. I mean, primarily, again, you want to generally listen to people that have been in the market longer than 4 months. Just a heads up. So here we actually see that we had a really long-term accumulation take place, and we are now just finally testing the top of our accumulation channel effectively. So this to me represents what's known as a last point of supply before we go much higher. So even though all the talk on the street right now is about how this was a distribution, it is very temporary. And we've gone over this many times in our group, and for those of you that are new to the channel, we've gone over this countless times because technically there is a small scale distribution which took place here. And if you got shaken out of the market because you didn't know what was going on and you thought that this meant the market was over because of distribution, that would have sucked balls for you. Don't make mistakes by listening to people who know very little about what they talk about. Now, I'm not claiming to be the greatest or the best. I'm just saying, look, I recognize that I make mistakes. I'm a flawed human and individual, but I've been in these markets since 2000. Well, technically longer, but when I first bought Bitcoin at 90 bucks, I didn't buy it because I thought it was a good idea. So I'm not including that. I bought Bitcoin for the first time I thought it was a good idea at the all-time high of $1,000 at that moment. I watched it come down to $200, and I started teaching myself what it was to be in the markets. And I've been doing this for a long time. It's like one of my favorite things to do is study market sentiments, because to me it represents this sweet kind of keystone of recognition that consciousness does not leave. And that's what these areas represent. Is what we're doing is we're charting human consciousness and human psychology, and the market cycle itself off accumulation and distribution happens in multiple stages. So we've talked about this kind of, again, a few times here, that what you see on the left-hand side of this accumulation and distribution is like the idealized version, right? So a big part of the conversation that people are having with us, oh, this was accumulation and this is distribution. Well, actually, if you go back and you do a lot more research than just what the internet plainly provides you for free on a cursory research, you would note that most market cycles are actually 3 segments. You have an accumulation, and then you have a reaccumulation, which can look like a distribution because it will come down, and then you go up even higher. So technically a market cycle is like closer to 3 segments usually. And right now what I believe we're witnessing is basically what will become a large scale reaccumulation. And more importantly, I think it's going to look like a reaccumulation after decline. So again, we're not new here. If you'd like to, we have all these beautiful charts. You can go to arcanebear.com, and if you're already a private member, let's see here. Okay, let's try this again. Arcanebear.com. I don't know why it's not letting me do this. Oh, there we go. It's loading now. And under Den, Wyckoff trading ranges, I want to go over the reaccumulation after decline. So generally in the middle of these markets, what you'll have is an area of reaccumulation, right? And what big players like to do is shake out weaker hands. So we're going to go over a few different instances of communications right now because I think it'll be helpful. So this is what I believe we're about to witness, is a reaccumulation after decline schematic, or what we call reaccumulation schematic 4. This is another version of a Wyckoff accumulation range. And at the top, it looks like there was a distribution, and you come down and you form a really hard reaccumulation zone afterwards. And this is exactly what we saw back in August, right before the bull market started. And this is why I don't want people to be deceived by misunderstanding distribution, right? Because it can be very temporary. So here, this was a reaccumulation after decline. You had a decline moment, which looked like a distribution, which it was not fully, right? It only moved into a reaccumulation zone. And if you thought the bull market was over again here because you thought that was distribution, that fucking sucked for you. Don't make that mistake. So what we're witnessing right now, I believe, will be a reaccumulation after decline. And we'll probably spend about a month or 2 in this area. So we're not going to rip to $70,000 overnight. Now that would be amazing. I would love to see that, just because it's always fun to see, it's like the market like almost like talk shit against newbies, right? Because the downside is we don't want you to make the upside is I don't want you to make these mistakes. The reason why we go over videos on a day-to-day basis is to try to help share the sentiments and the understanding of what I've spent years practicing, and especially quelling the emotions. Yesterday, when I was excited, I was like, yes, this represents buying opportunities. This is the most fear we have seen in the market since the pandemic. And there are multiple ways to look at this, right? So first off, again, a reaccumulation after decline is what I believe we're about to witness, which means, yes, it was a very temporary distribution that we saw. It is not the end of the bull market. And what I believe we're going to see right now is another reaccumulation zone that keeps us probably between $45,000 and $32,000 to $35,000 effectively. So it'll look something like this when it's done, and we'll probably spend between here and say June, July, or August floating around this $40,000 area and basically boring the new retail investors. The entire point of these reaccumulation after declines is to make the new investor feel bored, walk away, look at something else, and forget that they were even interested in this sector, period. Okay. So the difficult part is, again, everybody has an opinion, right? So, yay, I have an opinion too. What is that worth? Well, we could say nothing. But I've been showing up here every day talking about Wyckoff accumulation and distribution patterns for at least a year and a half. Prior to that, I've been talking about general accumulation patterns for, let's say, this is year 4 now. So I'm not new here. I've been able to show up. Yes, we get some things wrong. It's not always perfect. If you take the investment thesis, it always works out. But right now, what we can see is we're hitting a really hard supply line. So again, I'm going to delete some of these regression lines because it's just cluttering up the chart. And what I want to focus on is this supply line coming down from here. So this is a really hard supply line. Notice how we hit boom, 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 and we couldn't get above. For the first time today, we've gotten above that supply line. And this is also noticeable again when we turn on our Bollinger Bands, and we can see that we, for the first time, have jumped into the band itself, right? So this is an important moment. If we come back down below, we touch our moving averages within the band, we're going to jump up to $43,000 quite quickly. And again, I do not think that this reaccumulation is going to take just an overnight. I do not believe we're going to rip to $70,000 right away. Although we could, we have to remember that almost all the new retail investors were pushed out of the market within the last few days, and even more so have been told by channels that have hundreds of thousands of followers that the bull market is over, and they are probably wrong. So again, right? Hey, I could be wrong, but I haven't been yet, at least in terms of my goal here, which is to spot the beginning of the market and the end of the market. I don't believe this is the end of the market because back in 2017, we saw almost an identical analog, which is if we go back here. Now, again, there's a bunch of people that have shared this on Twitter. We've gone over this in our video countless times, that back in our previous accumulation range, what we saw was a big run up in price. Big run up in price, and then very quickly a huge drop down. And again, the downside here is someone making a video on YouTube for the first time could easily knock you out of a price because, look, yes, these are temporary distribution moments, right? This moment here, you could be like, oh, look, it's a giant head and shoulders, see, because I know what I'm talking about. This represented a buying opportunity unless you screw up and make the mistake of not understanding the macro perspective, which is you zoom out from the chart and you really understand what's taken place on multiple time frames in over the course of the last decade within Bitcoin, which is we see these large accumulation ranges and massive run-ups, right? And those massive run-ups within inside of them have these big down moments. This was a 40% down. This was a 46% down. And both of these you could have been confused by thinking, oh yeah, look, see, it's a distributional moment. And although it is, it's not worth your time to understand because really this just represents a buying moment. Now you could say, well, Tiho, I could have removed all of my position and jumped back in 50% lower. Yeah, you could have, but people usually fuck that up. Again, listen to people that have made billions of dollars instead. Again, you don't listen to me. Go read books like 100 Baggers. Go read books like Dan Dow. Go read books like The Alchemy of Finance. Understand that the people who have made billions of dollars follow strategies of long-term macro perspectives and ignore this wash in between, because if you think that this is a big deal, you're gone. You're not even in the market anymore. And that's so disturbing because ultimately, I'll show you here too. We go back to when I like first implicitly bought Bitcoin on purpose, because I did buy it at first at $90, but not because I thought Bitcoin was awesome technology. I bought Bitcoin again, and this is around $900 American, being like, this is amazing. I love this free choice money. No governments involved. We're just trusting technology to be our point of exchange. This is fantastic. No borders, like so much cheaper than wire transfers. I'm in. Well, I made the mistake of getting in, like most retail investors, right at the freaking top again, right? So I had a few Bitcoin down here, and then I bought a few more Bitcoin up here. And then I started studying day in, day out. What did I get wrong? Because fundamentally, I believe in this idea that we need a money that is not controlled or manipulated by some government body who can just randomly decide to inflate it whenever the fuck they feel like it. So I believed in the fundamentals, at least of my assertion of the concept of why Bitcoin is valuable and why I thought it would be a great investment. But clearly I got the timing wrong. So what I started to do, I started to study day in, day out, what's going on in the markets, and I started to buy more every now and then, right? So back in 2016, I started screaming to everyone I knew in Costa Rica, holy crap, Bitcoin is finally going up again. This is amazing. In 2000, here, screaming at people in my local area, Bitcoin is at $400. This is crazy shit. Like we're back above like the mid-range of the accumulation pattern, right? Nobody cared. So what did I do? On March, right here, I decided to open the Arcane Bear YouTube channel and go, look guys, there is a giant cup and handle taking place, and this is a huge bullish move. We can expect at least 100 to 200% on this move, if not more. And I boldly made the statement of saying, I think Bitcoin's gonna go over to well over $10,000, which in that moment when Bitcoin was at $1,000 was fucking insane. I was an insane person for saying that, technically speaking, but I was also right. So going through this whole cycle previously, I wasn't selling Bitcoin at $6,000. I wasn't selling it at $3,000. I sold some of it at 20,000, probably, or well, not 20,000, sorry, like up near the top. Let's see, there's a range of selling effectively. But even then, I didn't sell everything, right? I sold, again, at that moment, what I needed to make sure that all my businesses could function for the next 2 to 3 years, because generally a bear market, when you actually get to the bear market, you can estimate that you've got some 300 to 900 days at minimum of downtime, right? So but if you look back, even if you had bought just like I had done at the all-time high of the last cycle, you're still in profit. So all the Bitcoin that I had bought at $1,000 eventually went up 20 times. And this is the importance to understand about a long-term accumulation strategy, is if you just keep buying and you basically ignore the price, what you end up doing is accumulating a shit ton of assets and not getting dragged around in the markets. You could be doing something better with your life, right? And that's what we're trying to teach you to do, is give you the confidence through this macro perspective of what takes place, how many times these cycles have repeated themselves, so that you don't get washed out and you get to partake in probably what is one of the greatest evolutions of technology we have seen since the birth of the goddamn internet. You don't want to get pushed out because like some random video is like, yeah, the bear market's over, or the bull market's over, it's a bear market. It is not. We are just hit the halfway point, and it is clearly noticeable if you do your research, especially in the things like the reserve risk ratio. Have we seen this before? It's another great question. Yes. Back in 2013, we saw a double peak. So right now we could say, yes, this is a peak zone, and the price looks like it's really high, right? So what we have to remember is that the price is irrelevant in the risk to reserve ratio. We need to understand that the risk to reserve is only this orange line. This white line just shows the price itself, and as the white line moves up into the red, it's not a risky area. It's the risk to reserve orange line that we're most interested in. So where we are right now is actually not that far away from the purchasing that you could have made back at Bitcoin at 20 grand. That's how low the RR is right now. Your reserve risk is back at basically around $20,000. This represents one of the greatest opportunities a new investor could have if they know what they're doing. Do not get fooled by YouTubers who think that the bull market is over because they lack the credibility and understanding to have been here long enough to even know the macro cycle. Or I don't know, I don't care. I mean, I do care. I hope you don't make stupid mistakes. Don't use leverage. I try to help you guys, but if you don't want to take good advice, I don't care. You'll learn the lesson the hard way. Go ahead, touch the hot stove. Fine then. Touch the hot stove. Like, I don't know how many times I can tell you. It's hot. If you really need to touch it to get burned to find out, you go right ahead. That's it. You'll learn the lesson. You'll come back and be like, wow, Tio was right. Great. I learned my lesson the hard way. And look, most people need to learn that way. I'm not negating that most lessons come from getting burned. All the power to you. I don't think we even need regulators here. I would prefer people got burned, learned their lesson, and then moved on with their life with the deep knowledge and wisdom that comes from experience. Okay, so where are we? We are at, again, a beautiful point in this market. Could we go lower? Yes, still. Yeah, I think so. But we're about to witness a really important moment, which for the first time on the 6 hour, we are closing within the bands and breaking the supply line. So we'll go over this again, just to make sure it is clear what it is that I'm trying to say. This is a supply line. As you can see, we've come down and we've hit that supply line. And even more clearly on the 45-minute, you can see we'll drag this all the way to the top, the last kind of supply line. And there, just like that. So you can see that we've actually been hitting this supply line multiple times on our way down. And for the first time, we've crossed up above it. And another co-aligning factor is that we have jumped into the Bollinger Band, representing, again, a bullish moment. Now, here, again, you can see we've jumped into the Bollinger Band here, and we tried to jump in here as well. So a big part of what we need to do now is close above our moving averages here and stay there, and then more importantly get above $40,000. And I believe what we will witness then is around a 2 to 3 month reaccumulation pattern after decline, which basically will follow us in between these regression lines between $46,000 and $32,000, making people bored, being like, oh, see, Bitcoin's dead. Like, see, it's back down at 32 again. Oh, it's back up at 44. See, it's not going anywhere. Should have, this reaccumulation after decline is usually designed to confuse people, and that's what it's been doing. It's doing a fantastic job, especially with people that think because we've seen a temporary distribution that the market is over. And again, just to reiterate this so that people know just how freaking clear we need to be, because it is important to understand that the same thing would have washed you out back here in August, thinking that this distributional moment was the end of the bull market when it was in fact the fucking beginning. You're like, oh, see, it's a distributed, beep, 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 beep. Nope. It was a reaccumulation after decline, and it represented, again, one of the greatest opportunities to buy Bitcoin that we had this year. Anyways, thank you guys all for joining us. Give us a thumbs up if you like this content. For those of you that are really interested in high-level conversations with people who are significantly smarter than me, I like to have them. And later today, we have Emin Gunseer, the Avalanche and Avalabs founder, on our podcast. So keep your eyes open to that. It will be on at 11 a.m. Brilliant individual. I cannot thank you guys enough for joining us. I will take maybe about 15 minutes on the live stream to go over your guys' thoughts and questions. Now, I'm going to warn you all, if you spam in this chat or post stupid things, I will simply remove your ability to comment. Some of you said, oh, well, why would you ban people that comment stupid things? The same reason why I do not keep friends that do stupid things. I like to associate with as quality as of individual as possible, and I will no longer give you a highlight capability. So keep in mind, if you would like to get your commenting capabilities removed right away, you go ahead and say something ridiculous, and I will take care of that so the rest of the people who are trying to learn quality, valuable information are able to do so with as little freaking noise in there as possible. And from there on out, I will no longer give it any more recognition because I'm not going to let it bother me. I'm just going to remove your ability to comment, and then we'll call it a day. So keep that in mind. If you would like to have your comments removed, say something ridiculous, and then maybe you can never earn them back. That's it. Because I just don't have time for this. There's too many people offering horrible ideas, and I would like to try to keep this community as clear, concise, and as ultimately as valuable as possible for everyone that is in there. So let's scroll out here. Let's give Bitcoin on this beautiful multi-year chart we've drawn up here, and not changed since March 11th. So thank you guys for this. Totem says, I love being bored and buying Avalanche at $12. I agree. That was ridiculous. What a beautiful opportunity that was. Crypto Cash says, yes, this time I'll take profits while I'm still a millionaire. Got greedy and lost half. You did not lose half. You still have the same amount of assets. It is important to remember my house price and the property has fluctuated wildly since I've bought it, but it's always had a waterfall, hundreds of fruit trees, and a private well. You need to understand the value of your investments, not the price. If you are too focused on the price, you're making the wrong choices almost always. Go read more books. You will understand people that have made billions of dollars more than me, and you, most likely, at that point, because $1 million is basically chump change. It won't last you more than a few years if you had no job anymore. So, or like, let's say 10. 10 is a good number. Especially if you like to live like me, where I sit outside and meditate half the time. Like, it doesn't cost me anything to do that. But again, understand that the value of your investment is significantly more important than the price. And if you understand the value, then you will be making further investments at that moment. Should you always have cash on hand? Yes. Like I said, I need cash on hand to make sure that businesses can freaking operate. And that's been in my life since before I ever made investments, because I started businesses long before I was able to invest, because how else do you generate revenue? I don't know. Good, interesting thought there. Banter YouTube says, you've hit the nail on the head. Well, thank you for that. IBBYS says, I love the content. Love your take on things. Thank you guys all for the great comments. First time watching. I trust this guy. Don't necessarily trust me. Again, I'm just sharing my opinion. I've gone through my own viable mistakes and recoveries from that too. So I'm just trying to share with you my lessons. They may not be true. So far, so good. But again, don't just trust me. Verify. Take the time, read the books by people that have made billions of dollars instead of just listening to some random YouTuber. It's always a smart idea. Okay, next comments. IK2243 says, I wanted to thank you for the info about Hex yesterday. I agree with you. Thank you. Again, all I'm trying to do is inspire more research and more study. It is one of my favorite things to do. I have dropped out of school, but I like to consider myself an avid learner. I spend lots of time listening to smart people, and often actually having the pleasure and capability of talking to them because of this podcast. I've had plasma physicists, solar physicists. I've had theoretical physicists, practical physicists. I've had all sorts of mathematicians, PhDs in blockchain on this channel. I love communicating with people that have a diverse range of knowledge. So I thank you guys all for supporting this channel, because it's what gives me the opportunity to have those conversations with such interesting people. Do you believe in Avalanche over Cardano? Yes, I'm a significantly more interested in Avalanche than Cardano, period. Lysergic Dub says, I would love to converse with the private group, but with my portfolio size, I feel that I would rather put a couple hundred more into assets. Yeah, great. Go down that avenue. Again, the private group is for people generally operating on managing their own portfolio already. If you're new to this game, look, we give away free information on almost a daily basis. And not only that, anything you would like to find, you can probably find for free anyways. I still download free books if I can find them. If I can't, then I buy them. There's a bunch of books I actually I pirated because I've been like what, the Bed of Prosciuttis. I found that on PDF, put that on my iPad, right? I'm like, great. I also pay for the audiobooks. So it's a hit and miss. You can find a lot of information for free. I suggest you do that, but the mastermind itself requires skin in the game because it's a much higher level of conversation. And I do think you should go the way that is most successful for you. Bitcoin is unlike anything that's ever existed. People try to copy it and fail. First off, I disagree with you here. Bitcoin is not like is a revolution in technology, but if you do your research, Avalanche is probably the greatest revolution since Bitcoin, and I think a lot of people that's gone over so many people's heads. So don't miss out on furthering your research and becoming invested in a cult simply because you're not interested to learn more. Avalanche is better technology, period. Okay, what did you do when you first bought crypto? So again, when I first bought Bitcoin, it was $90, and we bought them because I worked in a industry where we were using servers to host websites around the world, and the places where we were hosting websites, hey, lodi do da ba do da day. So remember the hamster said dee da do ba do. It's like the same time. What was that, 2011 or something? Bitcoin is at $90. Dee da do ba do ba do dee ba dee da. Some of you are old enough to remember this, but we bought it because they offered us 50% off all of our servers at that moment if we used Bitcoin. So we're like, great, hey, what a fantastic financial decision. We're spending hundreds and hundreds of dollars a month on servers. Let's get half price by using this crazy internet money. Sounds great. So we bought a bunch of Bitcoin to use to pay for servers, and that's what we did. We used the Bitcoin as a currency at that particular moment, and we ended up keeping some because we ended up using PayPal more frequently. There's a dog under my chair, so he's moving my camera around. Get out from the chair there, little man. So I bought it at first for its use case itself, which bodes in no way to my intelligence of understanding about what Bitcoin was at $90, but $1,000 at the Cypritic collapse. That's when I got it. That's when I figured, oh, money that we can choose. That's what money is. Money is a choice to believe in the medium of exchange that we are using. I am so sold on this. Anyways, that's that. Should I invest in Bitcoin or Avalanche during the reaccumulation phase? You should do whatever you feel is best. I cannot guide you in that. I am not a financial advisor. I own both. What is your prediction for the bear market? I think it is going to be a much less difficult bear market that we had in the 2018 to 2017 timeframes. Just because we have so many smarter investors here, and there's some seriously interesting DeFi protocols that will destroy the banking system. More than just, like Bitcoin is like, yay, we're going to replace the US dollar, but DeFi is like, we will replace the entire freaking banking sector. So don't underestimate the DeFi space. Legacy of Light says, I am grateful for you, Tiho. Diamonds, thank you. I am grateful for your support in this space as well. I'm going to skip down to the bottom here. Again, there's just so many questions coming in. Skip says, hi, man. I love your thoughts. I've been in the bear den for 2 years now. I don't talk much because I'm really, really busy with normal life as well. Well, thank you for supporting the bear den and also giving us a super chat. Thank you for letting everyone know that you're a part of the family, and it's good to see you, Skip. Remember to drop us a hello in the Discord. We always love seeing what the bear family is up to. I'm just going to skip to the super chats for now, guys. If you're in between that conversation, you're going to miss it. John Paul Valky says, Koala GPZ here, and joining the bear den was the best move I've made. Your info and intel was always mucho beneficial. Now, ladies and gentlemen, I do not think it gets any better than that when people are paying to tell me thank you for a service that they pay for. That is just crazy to me. So thank you, John Paul, for making a super chat. At the end of this episode, what we'll do guys today is we will make some contributions to some underbanked and underserved entrepreneurs because of these super chats. I got about $200 in there. Justin Chris says, first time on your channel, hodl looking forward. I'm not a hodler either. When I feel that the bull market is over, I scrape off, again, 3 to 5 years worth of operating capital. We did that at $56,000. You can go back and watch our videos because it said, look, we could go either way right now. We could drop to 32K or we could run to 100. I'm going to remove some risk because neither of those are good situations. There's only 2x for the upside and an equivalent to the downside. So I was like, yeah, we're right in the middle. Let's just remove some of that risk. So I'm not just always a hodler, but generally speaking, building a portfolio, acquiring more assets, the best thing to do is just acquire more assets. What's your price prediction for Avalanche? That makes no sense to do that because it's irrelevant. What's the value of Avalanche is the question you should be asking. And that would require you to do more homework or listen to the podcast at 11 a.m. because then you'll know how valuable it is. And who gives a f what the price is if you know the value of something? Is it better to take profits at the peak of the bull market and then exit the market before the trend begins? Or is it better to keep your positions accumulate? You know, a lot of people think that they're going to make money by like day trading, which is usually a surefire way to lose money your first few times. I don't suggest doing that. So if you're new to investing, anytime you see strength, if you're up, removing your principal capital is like a genius move, because let's say you put 10 grand in, you're up, it's at 20 grand. As soon as you take out your 10 grand, you can't lose anything and you still have assets. This is like the easiest freaking play in the playbook. Remove your principal if you're up and walk away. That's the easiest way to say it. But anything outside of that, it really depends on the investment. And again, I'm not a financial advisor, and you should definitely not take financial advice from me. All I'm doing is sharing my journey and the things that I am witnessing through that journey. That's it. Lysergic Dub says, I've been in the market for 3 years now, and thank you for the advice. I'm still up over 5x in my portfolio. I feel comfortable with the drop, and I'm basically here for the long game. Awesome. Navathine, what an amazing story. I love it. Kind of reminds me of ETH and NFTs. Great. I have $700 I should spend, wait for the dip. You should just be constantly investing and not thinking about dips at all. You should ignore the price, just like Michael Saylor has done. So guys, learn how to play like the big boys. Don't go, oh, they've got so much money, they can do whatever they want. No, they're executing the proper strategy, which is every day on a particular part of that month, Michael Saylor buys like another $15 million of Bitcoin. Don't be a baby, follow the right strategy and you will do well. If you're like, oh, I'm gonna time the market perfectly, I can prove that you won't. Danny Neal says, I don't have a big portfolio, but I'm thinking long-term. The more I sit back and learn and not FOMO, the better off you'll be. That is absolutely correct. I was going to skip down a bunch of thoughts and questions here as well. Remember, guys, if you would like to get banned from the channel, please spam. It'll make it really easy for me to know who to get rid of. Dan L says, Tio, the large green regression lines in your Bitcoin chart, did you draw the top one before we got to the area? Yes, I did. No, and it is also a match of the lower regression lines. Hey, this is a good question, Dan, so let's go over this. So for those of you that are new, there's so many things to learn. This is why I don't suggest trying to learn it to become the most successful at it right away. It will take you years to even get a good grasp about how some of these supply characteristics work. But see these purple lines, or more importantly, the specific red line at the bottom? This is how the regression angle works. The regression angle works leaving the bottom of the spring, and you build out parallel from there out of your previous highs. So see how my parallel has stayed the same from back when we were at basically $6,000, $4,000, boom. And it will drag this one out just for clarification. And maybe we'll even make it a solid line just so it's a bit more noticeable. And we'll put it at 4x. So the red line represented the first movement of the regression line outside of the box. And as again, you can see we followed that on the upwards channel very, very consistently. I moved the red line a little bit around. Well, it's on the purple line there. So as you can see, the red regression line, we've kept parallel for the rest. So all of the regression lines are parallel based off of that move. And as you can see, when we broke the first regression line up here at $49,000, we basically fell to the second regression line very, very quickly. Bang, bang. Or boom, boom. I don't want to rip off Mr. Pompliano's buy the dip at every drop you can. But yeah, here we go. Regression line, regression line. These have been drawn since the beginning of the bull market. Good question. Again, I'm just going to skip to wherever you guys leave super chats. Oh, hey, great. Skip. If you're giving super chat funds to good causes like you just mentioned, here's some more. $50. Great work. Yeah, let's actually go over that now, seeing as we'll kind of finalize with this. For those of you that don't know, the Arcane Bear family has been driven by a simple motto, which is we like to provide community and communicate value to as many people as possible. So one of the things I'm going to do right now is I'm going to give you my face back and first off tell you to go subscribe to all of our channels, whether that's YouTube, Twitter, Instagram, any of those ones. We like to share parts of our life. It's not always about money. In fact, more importantly, I think it's often less about money and more about your internal relationship, about being grateful for the life that you have that allows you to bring in more wealth. Those who put obstacles in their way, especially invisible ones like, oh, it's the government's fault I can't make money, are usually putting obstacles in their way that make them fail because they find no way to success, right? Open your mind, allow you to be more successful. And one of the greatest ways to do that is by giving back to other people. We do that through a platform called Kiva. So for those of you that do not know, Kiva is a 5013C nonprofit organization that makes loans to underbanked and underserved entrepreneurs around the world. Since the beginning of this year, Arcane Bear has given over $12,000 in loans to, or the Arcane Bear family has given over $12,000 in loans to entrepreneurs around the world. So from agricultural, food, retail, arts and services, from the Philippines, Kenya, Guatemala, and Cambodia. We usually like to go out and find women that are working around the world, probably because they're the most responsible. They're the ones that provide for their, most often for the children after dads have left or whatever. I'm not trying to get down on guys, but here's the story. So we're going to read Nellie's story. She needs $75. One of the great things here too is that instead of just giving money to entrepreneurs, this is a way that they are inspired to continue to grow and build what they are already doing. So here's Nellie. She's 41 years old and lives with her daughter in a village of Chiraya, Casiliyahin in Peru, where she works in agriculture and sells products for household and use in a small store. She's going to use this loan to invest in the purchase of more soil to help pay for coffee harvests and her workers. So here she is harvesting coffee. I like that. I've been to Peru a few times. We're going to fill out the entire loan that she needs. Adding to the basket, proceed to checkout, bang. And we're going to make this loan to Nelly in Peru and also $11 donation to Kiva. If you would like to join the Arcane Bear family and do good by making loans, remember these loans get paid back 98.2% of the time. Yes, some default on their loans and cannot pay them back, but we like to think that all entrepreneurs are generally working their best to make sure that any loans that they've taken out over the years do get paid back eventually. And I know that they are not always successful, but we hope the best for them. And even if they don't pay us back, we're happy to do this because these entrepreneurs generally would not be able to get a loan from anywhere else in the world. So that's what we do. We're going to share this on Twitter right now. Again, remember, if you would like to, follow us on Twitter, follow us on Instagram, follow us in all the fun places. Join the Kiva family by going to arcanebear.com/Kiva. And that way, when you make a loan, we are making loans to help entrepreneurs around the world together. Thank you all for supporting the Arcane Bear. I do see there is one more super chat, and I do not want to miss this. So I will go back. I will go back to the charts and take a look here just so I don't overrun this one. It says, Vladimir Santi says, looking to become a member. I see the knowledge here and I've been missing out for too long. I can't wait to learn new things with the Bear team. Vladimir, well, thank you for that. One of the greatest things about the Bear family is it is a mastermind full of people. It is not just me. We are all learning. We are all growing. We all have skin in the game, and therefore we all end up becoming more successful because the community, as always, around the world is your strongest resource. So thank you to the Arcane Bear family. Thank you for all who joined us on this live episode today. I appreciate your guys' support. Still with the Arcane Bear. Oh, you know what we'll do? Because you guys always seem to love this, is we're going to end the episode with just a little bit of music. Because no matter what happens in life, you should recognize that there is always beauty. You could take all my stuff, all my money. You could put me in the middle of the jungle with nothing, and I would still be happy. And that to me is more valuable than money ever will be. And one of the reasons I feel that way is because I've spent the most of my life prior to this moment playing music. So I wrote a song for my grandma who passed away a few years ago. She was always one of the guiding lights of my life. And it goes a little something like this. So remember to tell everyone that you have in your life that's still alive, you love them, even if they're not, they've passed away. Make sure you are grateful for all the ancestors and people that came before to make the world that we live in possible today. This is Tio with the Arcane Bear. Thank you all for joining us.